Good afternoon. Welcome to another Wednesday webinar. I am your host, Stock Darts. Frank's running a little bit late, but he will be joining us momentarily. Hope you guys are having a good start to the week. As usual, we're going to go ahead and look at the four major market ETFs. We're going to look at the S&P 500, the NASDAQ Composite, the Russell 2000, and the Dow Jones. Once we finish with that, we'll take a quick look at the US dollar, how it's performing versus other currencies across the world, and then how it's affecting commodities. Once we finish that, we will go ahead and take a look at chart requests. If you have a chart request, feel free to put it in the chat. That way I have an idea of what we are looking at. You can follow me, of course, on Twitter with the handle @StockDarts. You can find me on YouTube under the same name. And if you're looking for more content, more trade ideas from me, you can also look for me at patreon.com/StockDarts. I post a lot of content there. Some of it is free, some of it is paid access. But it's a lot of extra content for those that like to look at the way I look at charts and stuff. Let's go ahead and get started. Welcome, Denise. Glad to have you here. Let's take a look at the S&P 500. And I noticed something interesting over the last week or two, and that is that we are starting to get stronger performance or relative strength out of the S&P 500 and the Dow Jones, and we're starting to get some weakness in the NASDAQ Composite and the Russell 2000. Typically when that happens, it's more indicative of a market that is more skittish in nature, still bullish. Generally speaking, it could still be bullish, but not quite in the rally mode that you'll get when you have IWM and the NASDAQ Composite leading the way. And it'll be interesting to see if that pattern continues. I think if that pattern continues, it means that we're more likely than not going to start branching off and trade sideways rather than continue climbing higher. Even though right now, you look at the S&P 500, you look at the Dow Jones, and it looks like we want to continue climbing higher. But it's a different picture, which we'll get to in a minute when we cover the Qs and IWM. But we're getting a little bit of a different picture when we look at the small caps and we look at the tech names, and when you add them all up together, I think what it shows is that traders are starting to take profits. They're starting to sell, but they're still holding on to the safer names, right? So the first things they want to get rid of are the tech names and the small caps, which again they've outperformed over the course of the last 2-3 months, and so they're more likely the ones that need to have profits taken anyway. And some of this could be just rotation of money into areas that were more depressed or lagging behind and are now starting to catch up. And I think it's a little early to sort of make any sort of sweeping or broad conclusions on the overall environment of the market. But I did want to point that out, that we're starting to see a little bit of shift in character. And more often than not, in a bull market, when you have those two names, when you have those two areas, the S&P 500, the Dow Jones, when you have them outperforming, more often than not, it means that the market is starting to get a little bit more worried. And again, in a market as strong as ours, I think it's more indicative of sideways action rather than a top or anything of that nature. I don't think we need to worry about selling pressure, a market top or reversal or anything of that nature anytime soon. I still think anytime the market drops, it should be viewed as a buying opportunity. And until we see a change in that pattern, overall we should still be looking at it through the lens of a buyer. And it's more a matter of trying to understand what type of an environment we're in from a bullish perspective, more than anything else, right? So you'll notice the S&P 500, we had a poor start to the week on Monday, right? We had a nice red candle, came down, almost tested the 20-period moving average, and then yesterday was a strong reversal, and today we're starting to trying to push towards new highs. We're right at them. Let me look. Let's see. We had all-time highs is 291.74, and today we hit 291.69. So we were just pennies off of all-time highs, right? So at face value, that's bullish, right? We're still just trying to push our way to all-time highs. Now, we do have a little bit of a wick forming today. We had a wick that formed at the closing price yesterday. We had one on Friday. And if I was just looking at the S&P 500, I'd say, well, we're still pretty much pushing to new highs. However, when you look at some of the other indices, you'll see that we're still having some trouble. And as I started going through names, especially on Monday, looking for new trades for the week, I noticed that there's a lot of names are either at highs and sort of pushing up into resistance, or are sort of tangled up in these messy consolidation / chop zones. And there weren't a lot of great opportunities from a trading perspective as far as finding names that have good risk reward or have setups that are ready to move. I noticed a lot of the names that had good risk reward, they had setups that weren't really ready, right? The beginning of a triangle, or a name that's chopping in between the support and the resistance levels of its channel, and the names that did have good patterns had poor risk reward, right? So overall, it seems like it's not a good spot to get too aggressive with the trading. Part of the reason why one of the trades that I put up this week on our Patreon page was a currency trade, because in general there weren't that many very appealing stock trades. Now we did have one yesterday, which we can look at in a little bit, that is working out or paying off so far today. But for in general, most of the trades that I was looking for, they weren't really materializing, right? And that leads me to believe that we probably are going to stall out here and start trading sideways to sort of get the markets to sort of reset and give us better opportunities. Now, again, with the way the market's been and with the strength that we've sort of this persistent strength that kind of continues to creep into the market anytime there's some selling pressure, there's always a chance that we continue rallying higher, right? And just squeeze and force traders to chase the action, right? Now, that's not us, right? We don't chase action. Hopefully, anyone that joins us for these Wednesday webinars is a disciplined trader or is working on their discipline and knows not to get into that trap of chasing action higher. But what the market likes to do in situations like this is either scare traders by dropping quickly, or force traders to chase the action by continuing to sort of drift higher, right? And when we have a market that's in that sort of mode, the best thing to do is to sit on your hands and to just wait for better opportunities, or just to be extremely picky and only take the trades that look really good to you, right? And that's the situation or the mode that I'm in right now, is just being extremely picky. I'll still take trades, but they have to be trades that are setting up in a manner that I'm happy with, and maybe even if they're doing something slightly different from what the markets are doing. But if you look at the S&P 500, and we're pushing down a little bit today, we take a look at a 5-minute chart, you can see we just sort of had a little bit of a sell-off, and looks like we want to go ahead and approach the lows of the day sometime soon. And you can see that the market's starting to, it looks like maybe stall out, right? And so what's likely going to happen now, if this sort of pattern continues, and let's change our trend lines back to, is that we've encountered a nice ceiling here at all-time highs. And again, we could push up and maybe test new highs, but for the most part, it looks like we need to sort of branch sideways and let the price action kind of come back. You'll notice we've been riding the top of that channel for a while now, right? You notice that we've been trading sort of in the channel since March or April. It's quite a few months now, as we sort of climbed our way out of the bottom here and used the long-term channel as a ceiling, right? And just a couple weeks ago, we tried to accelerate and break past it, and that failed. And then we've come back and we've been testing the 20-pair moving average. But ultimately, what needs to happen here is we need to sort of come back down and start testing some longer-term support levels, right? The 50-pair moving average, our previous all-time highs at 286, the bottom of this channel, which has held pretty steadily since March and April, and then from there, we should have at that point shaken out enough weaker hands to get new, stronger buyers to come in and start looking to push the market higher, right? Now, again, that could happen, that could not happen, right? The market could try to push or scare traders into buying and continue drifting higher. But I think what we're setting up for here, particularly when I'm starting to see money rotate away from the riskier assets of the Dow Jones and the small caps and rotate into the safer names of the Dow Jones and the SPY, is a market that doesn't want to necessarily sell, but they don't want to necessarily take risks and try to look for more price action. And as I said before, that's usually indicative of a market that's trending more sideways than anything else, right? So if that pattern holds, then I'd expect us to sort of chop back and forth between about 291 and about 286 over the course of the next maybe couple of weeks. And then once we start to get more of the traders that chase this action shaken out, we'll get new buyers that come in and decide, you know what, we want to buy here at 286 or even lower, depending on where we end up going from there. But my anticipation of the price action the rest of this week and into the start of next week is that maybe we probe slightly higher, but I don't expect anything really more than a point above this. And more likely than not, we chop between the 20 and start to maybe look for price action to start reaching the 50. As the 50 comes up to meet price, I don't expect this to come down to the low 280s. I'd expect that to happen somewhere here in the 288 to 286 area. And so this is what I would consider to be the most likely scenario, is that we end up trading in this area. And again, that's speculation, but that's what I'm planning on, and that's what I consider to be the most likely scenario. The next most likely scenario is that we continue to squeeze higher, and then what I would consider the least likely scenario is that we have a strong sell-off. Now, it could happen, right? It could be something happens again with trade fears with China, and we really swoop down. But if we do, I would look at that as a buying opportunity, particularly once we start to get to the bottom of this channel, somewhere in this area. And that would be, again, the least likely scenario. But if it did occur, I wouldn't be terrified of it. I wouldn't be scared. I would consider that to still be a buying opportunity, depending on where we went. Now, if we fell below this channel, then that would be something different, right? That would be a pretty big change in character, and that would mean probably we need to step back and reevaluate what's going on with the markets and try to figure out where we want to go from there, because that would be an interesting spot as far as we're looking at already approaching towards the end of the year, right? We've got 3.5 months now, and if we fell below that channel, then that would put into question just how we want to close out the year and what the market wants to do. Now, there is often a lot of selling that comes into October, and that's something we want to keep in mind. And if that plays out as it normally does, normally you get a sell-off in October and then a nice rally into the closing months of the year. It's not like clockwork. It's not something that you should base your trades off of, but it's something to keep in mind. And we'll see whether that pattern sort of continues or not. But what I'm looking at right now, I don't want to look 3 months into the future right now. I'm still concerned with what's happening over the next couple of weeks. And I would say the most likely scenario over the next couple of weeks is that we just chop back and forth as we start to establish price action above 286, but struggle with new highs. Now, if we look at the NASDAQ, we have a totally different picture, right? You can see that we're losing a lot of momentum. We actually have, even though some traders would say, well, we're still sort of trading in this pattern, but we're not. We're actually we're seeing price action deteriorate here, and we're actually starting to lose momentum and falter a little bit below this trajectory that started maybe in the middle of June, July, where we start to climb higher above 171, and we're starting to lose that, right? You can see it a little bit. You can see it pretty clearly. We're losing the 20-period moving average. We're testing the 50. So you'll notice the S&P 500 still hadn't really challenged the 20-period moving average, and the NASDAQ is actually below the 20-period and already challenging the 50-period. We're also starting to lose a pretty significant intermediate-term trend line. So momentum is slowing down on the NASDAQ, right? And we're going to see the same thing on IWM. And this goes back to what we were saying before, that I think traders are starting to get wary of this market, and they're still holding on to the names they consider safe, but they're starting to maybe abandon some of the names that are a little bit more risky, a little bit more volatile. And that's sort of the case here with tech names and with the small caps. Is this indicative of a market top or anything to be significantly worried about? No. I think it's something that's due. And again, it's the normal process that happens as shares exchange hands between new buyers and sellers. And we need to sort of kind of come back and probe to figure out where people really want to buy, right? This goes back to this question you want to ask yourself every time you're looking at a chart is it looking for buyers or is it looking for sellers, right? Is it looking to figure out where people want to sell, or is it looking to figure out where people want to buy? And I think we're starting to get a transition in the tech sector where the market's starting to explore just where people want to buy. Now, we haven't had a lot of strong selling to say that, well, we found 100% no one wants to buy above this area and everyone's going to sell at 186. But we're starting to see the traders get a little bit more nervous, and I think we're starting to figure out where traders are willing to buy in the short to intermediate term. So what do we look at from here, right? What are the levels we should look at? Obviously, there's a short-term level here at 178, right? And that's probably where we want to go, at least in the short term, right? Typically what happens when you break a channel like this is you come down, you test a lower level of support, then you kind of bounce back up and retest to see if that's a confirmed breakdown. And then from there, you decide whether you need to go lower or just trade sideways and then eventually resume the uptrend. That's the most likely scenario. That would line up pretty consistently with what we're seeing out of the S&P 500, where the S&P 500 needs to sort of just retest or trade sideways. If the NASDAQ were to just test this area and stay in this area, that would be probably the most likely scenario. And from there, then we figure out whether we need to sort of probe lower, or if that's going to be enough to sort of reset the balance and then start exploring higher again. If the markets were to sell off more strongly, we'd come down to this area. I would consider this area around 171 to be very strong support. It would actually be a convergence of a few areas of pretty major support, which is one, I think this is a strong level at 171. Two, we have a nice sort of ascending trend line, which is important, and more than anything, it mirrors the 200-period moving average, which would also be right around that area. So I think if we did get strong selling, I wouldn't be too worried as long as we stayed above this level. But just like we mentioned with the S&P 500, if we fell below that and sort of held below that, that would be pretty worrisome. And that would be maybe a warning signal to get a little bit more nervous about the market. But until that happens, as long as we're above it in this area, I have no real qualms with the market, no worries. And any selling that I see on the chart is, to me, a buying opportunity, not something to get worried or to start really freaking out about the market. Now, there is the other scenario that we do find some support and squeeze higher. I don't think it's the likely scenario, but it could happen, right? And if you take a look at what we're seeing here, you could see that we're in sort of a secondary flag here, and then maybe trying to make our way back above it. And that is a possibility. It could be that we are in the process of retesting this sort of a move. And if that's the case, we could continue to sort of push higher. And that is a likely scenario. Or not, it's not the most likely scenario, but it is more likely than I say that we drop down and test 170. And if this were to occur, then we'd likely start pushing back up, and then we'd end up sort of exploring this range, right? And again, I think if that were to occur, it would more likely coincide with the S&P 500 and the Dow Jones sort of just drifting slightly higher, and then we'd have the NASDAQ and the small caps, sort of confirm support, and that's a definite possibility. I don't want to say this isn't possible. I think this is. If I had to put percentages into play here, I'd say that trading in this area, probably about like a 60%, 70% chance of this happening, with maybe a 30% chance that we trade up here, and then I'd say maybe a 5 or 10% chance that we come down and trade down here. If I had to sort of put odds at it. Now again, that's just me just randomly grabbing numbers, so don't put too much faith in that, but that's the idea, or what I'm seeing and how I would expect things to shake out, and the amount of importance or the amount of attention I'm putting to each of those scenarios. I think the scenario that's most likely is the one that we just trade sideways and start to really explore this 50-period moving average. But if we continue to find buyers and come higher, then we'll end up chopping sideways and just staying above 182. And I think either scenario still is fine. And the more, to me, the scenario that I think would be more conducive to finding good trades is if we just drop to 178, reset a lot of charts, get a lot of weaker hands out of the picture, so we can find some good value plays at support. Now, if we look at the Dow Jones, this is a totally different picture again. If you take a look, what we just saw in the NASDAQ, and look at the Dow Jones, and look at this. We're breaking out. We're starting to challenge all-time highs. We're breaking above the ceiling of a channel. We're way above our 20, way above the 50, way above the 200. It's almost like they're not even related right now or correlated. And I think this again shows you that money right now is rotating towards the safest names that it can find. Now, some of this is not necessarily a rotation to safety as much as money rotating back to names that were depressed and hadn't run yet, right? The Dow Jones has been a pretty significant laggard over basically over the summer of 2018, after being one of the stronger areas of the stock market throughout last year and the beginning of this year, right? And we've reached a spot here where money's rotating back into the Dow Jones, and you can see the strength that's occurred over the last couple of weeks as it started to explode higher, when you're having the NASDAQ and the small caps sort of stagnate. And where we stand right now is pretty interesting. As I said before, we were discussing this idea of something looking for buyers or sellers. Well, clearly, the Dow Jones is looking for sellers. It found buyers, and at the moment, it's trying to figure out where they're willing to sell and take profit. And just looking at the Dow Jones in a vacuum, we'd say, well, this thing still wants to run higher. It wants to test its all-time highs. This area, this 265, almost 266, that should be a magnet, right? It needs to be tested. And so this one actually lends credence to the fact that maybe we need to drift a little bit higher and sort of test highs. Now, probably what happens is we come up to that area or stall just below it and then form a bull flag, right? This would sort of line up with what I consider the most likely scenario, which is that the S&P 500 also spends time chopping underneath its highs, and that the NASDAQ chops around trying to test its 50-period moving average. This is another reason why I think the most likely scenarios that we trade sideways is because that's probably what's going to happen here as well, right? If you notice, usually when you run up to highs, you tend to consolidate first and then push through them or fail. You don't normally just blast through them. It could happen, right? It could be that we squeeze and continue drifting higher. And again, that's the scenario that's second most likely to happen. But more likely what happens here is we're going to try to come up to those highs, and then we're going to just sort of really just chop back and forth, trying to build up momentum to try to push through, or ultimately, if that can't happen, then fail and drop down. And the less likely scenarios are that we just continue to push higher, right? And if that were to occur, we'd see the same thing on the S&P 500, and we would see the NASDAQ and IWM sort of establish the area they're at now as support, and then sort of follow suit. And then, again, if we sold off strongly, we need to come back down, and again, you can see a nice channel, very similar to the S&P 500, a nice channel that we've sort of stayed away from the bottom half for a while now. And ultimately, we will need to come back and retest that, but I don't expect that to happen in the next week or two. I don't think that's the more likely scenario, but it is a scenario. And more than anything, I want to point out, if we do drop sharply, which I don't think is going to happen, but if we do, I'm not necessarily going to panic. I'm still going to look at a buying opportunity here. And the only way I'd really be nervous about it is, again, if we somehow fell and found ourselves below this green trend line, below the 200, below 250, then I'd be worried. Until then, any drop, no matter how fast, is, to me, a buying opportunity. Once you see support candles sort of develop. Now, we look at IWM, and again, totally different picture from what we're seeing out of the NASDAQ, what we're seeing out of the Dow Jones, what we're seeing out of the S&P 500. This one's a lot closer to the NASDAQ, right? You have Price action below the 20, testing the 50-pair moving average. Sort of testing a previous ceiling that should act as a floor now. And really, this is another one where what we want to see here is a push-up, right? And so if we get the Dow Jones to try to continue pushing towards highs, if we get this S&P 500 to drift higher, then maybe the NASDAQ and IWM can sort of confirm support here and start to probe higher. Or it could happen that if the S&P 500 and the Dow Jones stall out, it could let IWM and NASDAQ sort of play catch-up here and just sort of slowly develop support and start to test higher, right? I think this one is slightly different from the NASDAQ because we haven't seen a total erosion of price action where we're losing any kind of a trend. It looks like we're just retesting support at 170 and trying to hold to get back above it. And we'll see whether that plays out or not. But if it does, then I can see IWM just sort of continuing to do this idea of building base upon base upon base. But it needs to sort of hold here, which it looks like it's struggling with. Now, if it falters here, I don't expect it to come all the way down to 160. I'd expect it to stay somewhere in this area. And then from there maybe build up some strength to try to break out of it. But again, I think the big thing that I want to point out here is the fact that we're getting very mixed action between the four major indices, right? We have IWM, which looks like it's trying to establish a base here. Looks like it wants to bounce above 170. You've got the Dow Jones, which is rallying to new highs and pushing to extend beyond them. You've got the S&P 500, which is basically stalling out at highs. And then you've got the NASDAQ, which is starting to lose a trend and looks like it's starting to set up for a breakdown, right? So you've got a completely different picture depending on which one of these you look at. And as I've said before, when you have the four major market indices all doing something different, more likely than not, it leads to a market that's going to trade sideways, right? So that's why when I see something like the Dow Jones, I don't want to get caught up in chasing it because what I'm seeing in the other indices shows me a market that's not as strong as what we're seeing here. That's why maybe something like this, I wouldn't get too excited trying to buy a breakout to new highs because, again, I'm seeing a different picture out of the NASDAQ and I'm seeing a different picture out of the S&P 500. However, the small caps, if we're looking at them in a vacuum, look like the most likely scenarios that we confirm support here and then try to make our way back up to 174. If that fails, then I suspect that we just chop back and forth right around this 169 to 168 area and spend a little bit more time trying to find buyers. Okay, so that's the four major markets. It looks a little sloppy. We've got different sort of pictures of what the market's doing depending on which one of these indices we look at. And I'd recommend that you sort of trade cautiously and make sure that you're pretty picky about the setups that you're looking for. Rather than be more aggressive, I think this is one of the times where we need to be a little bit more conservative and even branch out and look at other areas like currencies or even cryptocurrencies, which are their own mess and they're mired in a pretty ugly state right now. But look to be forming some bottoming patterns that maybe are worth looking at or investigating as well. All right, let's take a quick look at the U.S. dollar. Let's look at currencies, and then we'll move on to the chart request. Denise, you want to look at ALB and SQM. Both of them are miners with lithium exposure. And where would I put stops? We'll look at those in a minute. And same thing with Mike, Ron, Scott. If you guys have chart requests, feel free to put them in. Also, I'm kind of curious. I spend a decent amount of time looking at the U.S. dollar and commodities. Is this something you guys want me to spend less time on? Or are you fine with how we structure this so far? Because I feel like sometimes not a lot of people have a lot of interest in what I'm seeing out of the U.S. dollar. And maybe you want more chart requests. Let me know what you guys' thoughts are. I feel like sometimes looking at the U.S. dollar gives us a better idea of what the general environment is. But that might just be me. All right, so here's UUP. As you can see, the dollar is starting to lose some traction here. And Oh, okay, Ron. I was wondering, there was two Denises in there. I guess you're one of them. It's funny because I have you in here as Ron Anderson also. So you're logged in twice. But okay, Ron, we'll take a look at those for you. Okay. Um, as you can see, the U.S. dollar, similar to the Nasdaq, you can see an erosion of price action here. Right. We're starting to lose a trend. We fell below the 20, below the 50. So overall, the U.S. dollar is starting to lose some traction here. Again, a major reason for this is that this is heavily weighted towards what the euro is doing versus the US dollar. And if we take a look at the euro, okay, Ron, I'm glad to see someone else likes looking at currencies. I know Sam's not here, but Sam also likes to trade forex, and so I like pointing these things out. But I don't want to waste 20 minutes if no one else likes to look at them. But I feel that they're pretty important, and I think they give good trading opportunities. A lot more. I think a lot of traders ignore because they're kind of confused by pips and how currencies work. But I think there's a lot of pretty steady trading opportunities in currencies that traders ignore. But again, that might be me. All right, so here's the euro. Now the euro is picking up some steam against the US dollar, right? You can see the mirror of that UUP chart, right? We've got this trend line. We've broken above it. We stalled out at 117, but we came back and retested 115 and are building up steam trying to get back above 117. I'd say overall, this is kind of a bullish picture for the euro, but it's not out of the woods yet. It's still just trading sideways, and you can see it's finding a lot of pressure here at 117. And I think it needs to get a little bit better resolution before we could really say this is flipped to bullish. But I think it's done a good job of sort of bottoming out. Now, if we look at the U.S. versus the Canadian, it's actually struggling, right? And so this is actually a little bit of a bearish picture for the U.S. dollar, which I guess sort of aligns with what we're seeing out of the euro and what we're seeing out of the UUP index, right? The dollar's starting to struggle here. You can see it actually had done a nice little bullish breakout as it broke above 131, but it really stalled out in a major way at 132. And then when it came down to retest that breakout of this channel, it failed. And it came back in, and then it retested that breakdown, and that succeeded. And it's heading lower. It looks like it wants to head down and retest 129, test the 200-period moving average, and then from there we can see it could find some support and try to maybe stabilize here. Now, in contrast to this, the U.S. dollar has actually still gained strength versus the yen. This was one of the trade ideas I put in earlier this week. I think it was yesterday or the day before in our Patreon page, and it's responded very nicely, right? I think that this one has legs to 112 to 113. Ultimately, I think that the U.S. dollar yen wants to make its way back up to about 115. Plenty of room there. Will it do it in one move? Probably not. These currency moves tend to go slower and tend to play out over the course of months. But I think in general, we had a nice confirmation of 111 to support 111.50. And at the moment, want to come up and retest this 112, 113. And so for now, I think this one's responding well and should try to continue making its way up there. And as long as it stays above 111.50, I'm kind of bullish on the prospects of the U.S. versus the yen. If we falter and fall below that, then that's going to switch. But for now, I think that this is looking pretty positive. So it's a little bit of a mixed bag, right? We've got the U.S. dollar struggling versus the Canadian and versus the euro, but doing well versus the yen. And in general, with the U.S. dollar weakening, we'd expect to see gold and silver do better, but that's not the case. I think gold and silver, again, are in a pretty ugly situation. It's actually very interesting that we have the traditional stores as far as the traditional areas that people flee to safety, which is gold, silver, and the U.S. dollar, are not really doing that great. As long as the newer sort of replacement to gold, which a lot of people think is Bitcoin, it's not doing well either, right? And what that means, I don't know. Maybe it means something, maybe it doesn't. But one thing I'd like to point out is money's not flowing to any of these, which means it's staying in the stock markets, right? Which is another reason to not get overly worried about the stock market right now, is that money's not going to the U.S. dollar, it's not going to gold, it's not going to silver. So it's sticking in the stock markets for now. And as you can see, GLD, it's trying to bottom here, but it's still below a major level of support. It's struggling, really coming up to test moving averages. Silver's an even worse position. And until these patterns change, I really don't want to be involved with them. They're below in very, very important levels. If you look at it on the weekly chart, SLV in particular is way below this 1480, which is a key level. At this point, even if it bounces up, it looks like a bearish play to go ahead and short it again. Now, in contrast to these, oil's not looking quite that bad. When you look at oil, I think oil's done a pretty good job of establishing a range here. In the short term, the range is 70 to 65 or so. But I think in the long term, we'll go back to that weekly chart that I just exited. I think in the long term, we've basically established that oil is now a $55 to $75 commodity and not a 55 to 40 or so, which is what it spent the last couple of years at, right? From 2015 to about 2017, even the beginning of 2018, oil was, for the most part, a $50 commodity, right? Dropped down to 40, maybe go up to 50, 55, but for the most part, it was a 50 or so dollar. And we had that major breakout to start the year. And at this point, I think oil has firmly established that it is now maybe a $60 to $70 commodity, right? And that's kind of a key takeaway we can make from this, is that it is definitely on the uprise, right, or on the uptick. And now it's a matter of drilling down to the shorter term and figure out what it wants to do next. And as you can see, it's forming a nice pattern here. Now, a lot of traders would say, I wouldn't necessarily argue with them, but they'd point out that this could be an inverse head and shoulders, right? Got that. Bam. Right, so we've got a potential inverse head and shoulders. We're right at the neckline, and could possibly break out from there. And that's a valid pattern. The only really issue I have with that pattern is that, for the most part, you look at head and shoulders or inverse head and shoulders as reversal patterns at the end of a move, as the end of a trend, right? And that's not really the case in this one. It's not really a bottoming formation as much as it's just a consolidation in the middle of a range, right? And so that doesn't necessarily take away the psychology behind the play, but it takes away some of its strength, because that play tends to work more strongly when it's indicative of a shift in sort of sentiment, right? Which in this case, I don't know if that's necessarily the case. We just had, maybe a 5-day drop into this area, but it is showing that buyers are stepping in and finding confidence in the $66 to $70 range. And if that's the case, we should see a breakout from here and a retest of 74 to 75. If that falters and we sort of fail at the $70 area, which you can see, right? We've had selling pressure 3 different occasions now at this area. But if we can break past that, I expect us to come up and test the 75. I think that's the most likely scenario. If we falter there, we probably just chop back and forth and stay in the 60s a little bit, the upper 60s a little bit longer. Overall, oil definitely is stronger than the other commodities, and is looking like it wants to come up and retest highs. Hopefully it doesn't get above 75, but it looks like it wants to come up to test 75. All right, so that covers the commodities. Let's go ahead and take a look at a couple of chart requests. So Ron, let's take a look at ALB. Albemarle. All right, I didn't know Albemarle did lithium. Nice. Okay, so you're in these, and you're trying to figure out where you would, I guess, where you want to trail a stop, right? Let's look at it on the weekly chart. That's actually, all right, so this is a pretty nice looking chart, right? We've got this break out of this range. Right, so on the weekly chart, it's kind of coming up into a pretty critical area. This area around 104, 105, 106. But what is your entry on this? I'm kind of curious to see what we're working with here. And what time frame also. All right, so I think if I had taken this trade, right, and the entry to me is around 97, right? This would be an initial area to start taking profits. Okay, you have December 100 calls. Okay, so this is a situation where if I entered this around 97, 98, which I'm assuming you probably did, right? Somewhere in this area. This would be the first spot I'd be looking at profits. And then considering your timeline is all the way to December, my next profit zone would be 118, right? Now, you did it with calls. So there's a couple of ways you could do this. You can either just close out a couple calls and then trail a stop on the rest, or you could actually convert this into a vertical by maybe selling some 105s or some 110s and make the play like a free play, right? I'm assuming by now the 105 or the 110 calls are hopefully in a better position. Now, if you took this trade a couple days ago, then you're not quite there yet, right? But assuming you have healthy profits here, this will be a spot to take partial profits and then looking for holding the remainder to get all the way up to 118 to 120. If I were to trail a stop on this, this is a difficult spot to really say what the stop is because this is too steep to consider as a trailing stop, right? So you're up 40%, 42%, which is pretty good. On option plays, you can usually shoot for more, but that's pretty healthy, especially if you're depending on where you enter. But I think at the moment it's really hard for me to say what your stop is because we haven't set up a new pivot. And again, this is an unsustainable trend, so I would hesitate to say to trail this as a stop. What's going to happen, more likely than not, is it's going to stall out here, right? And it's going to do something like this. Now, it might not necessarily do that, right? It could continue coming higher. It could even reverse and come all the way back down. But more likely than not, it's going to do something like this. It could even maybe do this. And then start to make its way higher, right? Once this occurs, you can say, well, my stop is now 102. And then let it go. And then as long as it stays above that, you just wait for the next. You wait for the next pattern. Right? And then from there, you raise your stop to 108, and so on and so forth until eventually it reverses. Now, what happens, the one negative to this, of course, is whenever this happens, ultimately, you get stopped out at a price that's well below what you could have gotten if you had taken the profits at highs, right? And that's sort of the drawback to trailing the stop in this manner. But this is the way you stay in trends the longest, is by trailing them up only when you see a change. Now, the problem with that, of course, is there's always the case that this thing just goes. Let's get rid of this. There's always the case that it never really establishes a new pivot, and it comes all the way down to your entry, and you end up with a null trade, right, or a trade that doesn't make anything. And that's why I tend to take profits. I have sort of a two-tiered strategy when I'm trading usually, and one is that I'll always take profits on big days like today, because that way I'm taking profits at highs, and then I'll trail a portion of the trade, and I'll be more patient with it because I have that buffer. I already have some profit, right? And I don't have to worry about whether that comes back down to my entry point or anything along those lines. So there's 3 basic ways to trail stops on trades like this, right? And the most basic one is just to use a moving average, right? As long as it's above the 20, you stay in the trade. If it loses the 20 or the 50, you close the trade. The next one is a trend line, right? And trend lines sometimes work, but you might have to say the trend line is this, right? And you trade, because you don't want to trade, unless you're in a very short-term trade. If you're in a trade where you were only planning on holding it for a couple weeks, then yeah, use this trend line. That's fine. But something that you're playing out to December, then that means you probably wanted to get a little bit of a longer-term move. Maybe use this trend line, right? And then finally, the one that's the most open to interpretation is to use that strategy I just pointed out of just waiting for a new pivot low to develop, and then you raise your stop and you just raise the, just sort of trust the price action as it moves higher, right? And I tend to use a combination of all 3 depending on which trade. If I find a pretty obvious trend line, I'll use that trend line. If there isn't one, like in this case, then I probably just go to the pivots rather than use moving averages. I'm not really a fan. Even though moving averages are the easiest one, mathematically, price always comes back to moving averages, so I don't like to really use them for that, but it is a valid strategy if you just say maybe use the 50 or something, or the 20, and say as long as price is holding above it, this thing is in an uptrend, so I'll be fine. So I would say any of those 3. The one thing I would say for certain is I would probably take partial profits here. Just based off of what I'm seeing on the chart, it looks like a good spot for it. All right. With that in mind and those principles, we can apply them now to this one, SQM. So see that gimme guy. Now these guys I do know, and I do know they do lithium. I mean, I know Albemarle also. I didn't know they did lithium, but all right. So this one, similar to Albemarle, I think we're reaching a point here. Now we did have a nice. We did confirm a nice break past this floor here, right? Let's go to the weekly for a second. I want to point out a couple of key levels here. All right, so it's kind of what we're working with here. Now, I think that we're at a sort of an important level as well, which is 48, but really 50 is the key level. We've done a good job, and again, this is another one. This is too steep for me to really trust as a trailing stop, right? What I would say is the same thing. If you haven't taken profits, if I had entered this trade, I probably would have taken profits at 46 with my next target at 50. And with a possibly 48 to 49. You can see there's a lot of selling pressure here just below 50. But ultimately 50 would be the idea here. And it's the same sort of scenario, right? This is too steep to really trust as a trailing stop. But what I do in this particular case is we know that 46.50 is a key level. So if you don't want to wait for a shakeout, you can already trail your stop up and say, well, anything below 46.50 is not really that great. And maybe if you want to be conservative, you give it a little bit of wiggle room. You say maybe 46 or 45, right? And you trail your stop from there, because at least in this particular case, we do have a pretty significant level that we've already kind of climbed above, and you don't want to see price action fall back below there. So in this particular case, we can already say, well, we can use this as sort of a ballpark, and assume that if price falls back below there, it's probably reversing all the way back down. So we want to stay, as long as price action stays above that, then we're good. And again, ultimately, if we're going from here to December, 50 and then possibly 52 are the key areas that I'd look at. And then beyond that, it's going to be pretty hard to get above 58, because we still have a pretty big descending trend line, the 200 period, that's all coming downwards. So this one, going to be a little bit more of a tricky spot. Okay. All right. So other than that, I think a lot of the same sort of ideas that I mentioned with Albemarle, they're going to be the same here as far as how you want to go ahead and pick it. But the big thing is when you have a nice strong move like this into these chop zones, you probably want to take partial profits or maybe sell calls to turn these into vertical spreads and take advantage of some time decay. All right. Mike, you want to look at BIIB and NIO. All right. So Biogen was actually one of our trade ideas in our Patreon page, and one of the ones that has not worked out that greatly, right? It got off to a nice start, and then it reversed, and basically ended up being a stop out as it came back and retested the breakout, and then eventually sort of came back down. Now, it hasn't fully broken down yet, right? And it's actually not in a bad spot here. This is one of those trades, though, that I was mentioning earlier that it's at good support. We got good risk reward here, but I'm not digging this as, not necessarily that this isn't a bottoming pattern, but it doesn't really have a nice entry signal yet, right? I think that ultimately what we could do is say something like this. Let's go to maybe a 30-minute chart. See if we can get a clearer. See, I feel like there's not a clear descending trend line we could draw here, right? They're kind of horizontal in nature, right? We could say something like this. Maybe we could say that, right? And so if we look at it from this perspective, right? This area 340 is pretty important. Looks like 331 is our short-term bottom as far as this gap is concerned. If we can get a push back above 340, then maybe it can make its way back up to 350, 355, and then start to look at maybe going higher, right? So I think this one's okay. I think if the markets stabilize, if the markets can still trade sideways, if the small caps can sort of start climbing back above the levels they're at, this thing can make its way back up, right? But it needs to, at the very least, be above 340, right? If it stays in this area, there's more likely chances that it starts to head back and trade below 330. And if it gets back below 331, you want to stay away from it because then it's going to explore. There's a big vacuum here, and it'll probably explore that pretty quickly. So that would be the idea here. You want it above 339. And the problem here is if it gets above 339 and gets it to 340, then it has a chance to get to 350, right? That's about 10 points of upside, but that's also about, 8, 9, 10 points of downside, right? To get to your real stop point. So the risk reward's not fantastic unless you're ultimately targeting to move back into 360 to 380. And I think that's the issue I'm having with some of these trades, and which is why I was having trouble finding good trades for us, is that something like this looks okay on the surface of it, right? Because if it gets above 340, it looks like it has potential to make its way back up to 355. But again, is the risk reward really worth it? That's 15 points on a perfect trade back up to 355, and I guess 8 points. I guess the risk reward is still almost 2 to 1. I guess that's okay, but that would be assuming it could break through all these moving averages. But I do think this is okay. If it can get above 340, I think this is worth it. Okay. All right. What is this one, by the way? I saw this one the other day. What do these guys do? Obviously it's a new name. China's Tencent. Is this related to Tencent? It says consumer cyclicals, auto and truck. I don't know what this is. Is this a Chinese? Oh, never mind. This is the Chinese Tesla, right? Yeah. Okay. This is not for everybody, right? This is not really for everybody, but this might be worth a play here. This is not the pattern that I normally would recommend buying, but when you have these strong momentum names, they kind of come down and you get strong buying like we're getting today, it might be enough to go ahead and take a play again. What I find a lot of times with names like this is early on in the IPO, rather than trade off the daily charts, maybe scale down to like an hourly and trade off of that, or a half-hour chart to get more candles, to get a better picture of what the price action is doing. So you look at it like this, and you can say, all right, well, now we've got clear horizontal level here. We had a downtrend that was broken, and we've got an uptrend, which I think is not going to stick or not going to hold, but we've got an uptrend here into this level. And then you could play like that, right? And then, so you could look at it like this and say, well, if it can get back above 9, there's a lot of room here. There's room all the way up to 975 and probably all the way up to maybe 1050, right? If it falters here, then it probably comes back down to about 8, and then from there you can look at it again, right? Now, the other thing I want to point out with names like this in general is, and I think it's still early enough in the volatility cycle that it can continue. It can continue ramping all the way back up to 13. But with names like this that have this crazy volatility in the beginning, in general, I found what happens is that they do stuff like this, right? Whether it goes back to highs or not, but what they end up doing is eventually they just die down, right? And then sooner or later, the news dies, and then they pop again on big news, and they start to make their way up. I think this one is too early into its cycle to say that it's ready to die down. So I think it actually still has potential right now to trade to the upside, just because it's still so fresh and so new, and has so much emotion into it, right? These names are so volatile that there's a chance that this one could still make its way up to 13 and higher, or all the way back down below 6, right? This is a really volatile name. I'll give it to you right now. Before we close out the webinar, I'll send you the link. Okay, Scott? So this one has potential, but it's not going to give us this one's not going to give us easy chart patterns to read. To trade something like this, you have to be a little bit more intuitive with the price action. Okay, but I think it has potential. All right, Mike, you also want to look at IBB, which is going to probably be a similar picture to Biogen to a certain extent, as far as what it's doing, and then LABU faded today. Okay, so IBB. I think IBB's, it's interesting in that it's lagging the small caps, right? And I tend to look at these as similar in nature, right? You look at what the small caps have done; they're still trying to maintain price action above this area around 170. If you look at what the biotechs have done, they've lost sort of that level, like 118. They're back below it. They're struggling to hold above. They're below the 50. You can see today they're failing to hold above the 50. Not that excited about this right now. This looks like, again, eroding price action. Needs more time. Maybe heading lower. I don't know that I'd be angling towards keeping an eye on biotechs, and I think this is a ding against Biogen to a certain extent. Although, individual names always can do their own different thing. But I think in general, what I'm seeing here would mean that I'm probably not that interested in actively seeking out biotech trades. That doesn't mean if I see a trade that looks good and happens to be biotech, I'll still take the trade. But this is not an area that I'll be looking actively saying, well, this area looks good, I want to start looking for trades in this. This doesn't look that fantastic to me. Okay. There's until it changes this pattern, it looks to me like it wants to head lower and retest the 114, 113 area before it wants to get above 118. Well, it's going to be the same sort of idea. This is the 3x one. And I mean, it's funny enough, this one gives a slightly different picture. It's still holding that support, but what I've seen out of IBB would lead me to believe that this one is not really ready to make its way above there either. Okay. Oh, sorry, you were saying that Biogen faded due to, yeah, maybe. A lot of times they trade together. Sorry, I didn't realize that's what you were saying. But yeah, it could be that. It could be that. I mean, a lot of times they're correlated, right? So it could be that. You never know. Yeah. To a certain extent, it's doing the same thing that they are. It's just in a slightly different place, right? It's because it had that nice gap up. It's got a level that it's trying to hold above, and to, if you look at it, if you consider this level here, 340, as being analogous to 118, then it's slightly below it, just the same. But I would say in general, yeah, they're sort of doing the same thing, just on different sort of trajectories. I would say it's all right, Mike. That's what we're here for. Is sometimes we'll look at something like that, and it could branch off into a good conversation, or it could branch off into just a different way I look at charts. There's never look at something like that as a waste of time, even if it's not a trade. It could lead to a different conversation or a different idea that gives you one of those aha moments about trading in general, right? Not every chart request has to be about a potential trade. Sometimes you could just ask, like, what do you think about this? Why is it doing this? And we could try to figure out what's going on. Not every productive conversation is going to end with a trade idea, but it could end with just learning a little bit more about how to read a market or how to read a chart. Okay. All right. So you also asked about. I think I missed this one, right? JD was in there. Could I also look at JD? So Ron again. All right. So these guys are struggling. You can see again what ends up happening, right? When you lose these key levels, notice how quickly price really fell apart once we lost that key level, right? This is decent support, right? We had this. If you look at it along these lines, right? We're at a potential area of support on the weekly. This is a long-term look at it, right? Is it a major support? No, it could come all the way back down to the 20s, right? But this looks like a decent level. On the weekly chart, this looks like a bottom coming in. But on the daily chart, still more volatile. And I would say in general, what we want to see now is we want to see more support, right? Ideally, we'll have a pattern like this play out and give us a nice entry with good risk reward, right? If it breaks back above 28, well, that's tough, right? Because we got $2 to the downside, we've got maybe $4 to the upside. It's going to be messy. So ideally, what we'd like to see is for price action to sort of contract here, and then eventually break out in a cleaner pattern. And then from there, it has upside. It has at least maybe 10 points of upside from 26 all the way up to 35, 36, 38. I think the entry is, it's too early to decide on an entry, in my opinion. Now, it depends. If you're super aggressive, right, you could enter. It could have been an entry today, right? Because we have tweezers. We have sort of a bullish candle that just broke above them. You could say this is your entry. You could be happy with this, right? It's tough right now because we're already, I mean, it's only 50 or 60 cents, but we're well off of the breakout, which would have been 26. But someone that buys this, they're anticipating that this is a bottom. They're not. This is a guess, right? Yes, it looks like a potential bottom, but it's not really that confirmed. We just have one candle that broke above this sort of support level. And when you buy like this, you have to understand that there's a decent chance that you're going to have to wait while it consolidates and then continues that breakout, right? So this is the aggressive entry. If you are looking to get in, understanding that you might have to wait longer before it breaks out. The conservative trader will wait for an entry point, and if you're waiting for that, I don't think that I can say what the entry point is because it hasn't developed yet. It's all based on how we react to today's strong candle, right? If we surge higher for 2 more days, then I think the entry point is up here 28, but at that point I don't think it's a good entry point. If we chop back and forth, let's say we come up like this, and then come back down, and then do something like this, then the entry point could be 27, right? Or it could end up being something where we just break out down here 26, and that becomes the entry point. I think at this point, it's too early to say an entry point based off of patterns, off of a chart pattern, off of trend lines. But if you're looking off of candle patterns, then today would have been an okay entry. And it could still be an entry, even though the risk reward's not that fantastic right now compared to what it would have been earlier today, or maybe around 26.30, 26.40. But you have to understand that there's a trade-off, right? If you're entering more aggressively like this, you're entering while it's still inside a consolidation pattern. And when names that have this sort of downward pressure, there's a chance that this ultimately fails and it heads below it. But in that sort of scenario, you have a very obvious stop-out point, right? So you understand exactly what your risk is, and as long as it's not a gap down overnight, then you're okay there. Okay. Oh, congratulations! Good luck. Yeah, well, we're kind of done, but yeah, I'll see if I can do. I'll email you something with NetEase. Okay. All right, and then finally, Mike, we'll close out with TLRY. I am not in it. I am not in this. I wish I was. This brings up the point I was mentioning earlier about these names, that they're volatile. This one didn't really die down, but you can see the potential, right? This is what we're looking at right now with with NEO, right? With NIO, where in the beginning you have this big move and then it comes down and it looks like whatever, it might or might not continue, but then you get stuff like this that happens, right? This is just insane. I can't even draw technical levels on this or trend lines. This is just when stuff like this happens. This is almost like when you're trading cryptocurrencies, where you just have to trail a stop on part of it because you don't want to miss out on how crazy this could move up. It's just it's insane. All right, let me pull up this link for Scott. All right, so let's go to Discord. Where do I invite people? Oh, Frank already did it. I guess Frank's in here. Okay, well, Scott, I guess Frank gave you the Discord invite. I was about to do it, but luckily Frank did. All right, so that covers it for today, guys.
Yeah, some of those other ones, Rob, they expire. So
I know they expire
to expire.
Yeah.
Yeah, you have to reset it, and I think the ones that we were giving out just expired. So some people probably can't get back in. They just the one I gave them didn't expire. So that should work for you, Scott. Any problems, just message me or Rob. Good job today, Rob.
Thank you, Frank.
I'm just in an NQ trade right now.
Nice.
I popped in a bit late when you already started.
Right.
But nice job.
Thank you. All right, guys. That covers it for today. If you ever have a question, you can ask me at Discord, you can ask me on Twitter, or you can just email me. All of you guys have my email. If you're looking for specific content on Patreon, all of you, those of you that are in here are mostly subscribers, just ask me, and we can always, I can always tailor stuff to what you're looking for. But other than that, let's have a good rest of today, and we will meet again next Wednesday.